Welcome to Angel Impact, the official podcast of the Wisconsin River Business Angels. Episode 24, 5 Misconceptions About Angel Investing, Part 2. All right, well, let's move on to misconception number 4. Equity investors are untrustworthy, and they're angling to get their foot in the door with young companies and naive entrepreneurs, and they're intending to manipulate them and buy them out through aggressive legal maneuvering. They're out for their pound of flesh, so they want to kind of weasel their way into companies and destroy them from the inside entirely for their benefit. So, what's wrong with that idea?
There's a lot wrong with that.
And I feel like this is like from the 80s, with Gordon Gekko from Wall Street and Michael Milken. We were talking about that, the leverage buyouts, corporate raids and things, right?
They exist. Absolutely. They exist. Yeah. And for the unprepared, it can be disastrous. Absolutely.
Okay. Yeah.
But again, and our approach to this is to make sure that entrepreneur is as educated as possible. And that they are as prepared as possible when they enter this arena, because it shows respect for our investors and it shows our respect for the entrepreneurs and what they're trying to do. We want to do everything that we can to assure that they're going to be successful. Like I said, with or without us. We like to see an exit strategy with the investors that we work, with the entrepreneurs we work with.
Yeah.
And if they don't have one, even if they have an idea of how they might want to exit, we can help them develop that strategy.
Yeah.
We like to know that because generally angel investors are not in it for the long haul. I think there's a nice graph that we have on our website that shows the area, the stage of development of a company where angels typically get involved. It's called the Valley of Death.
Yep.
And the reason they call it the Valley of Death is because if companies don't get funded at that stage, they die. It's a critical part in the growth of a company.
Mm-hmm.
Angels will go in there, hence the name. That's how they got the name angel investors, because they go where no one else will go.
Yeah.
And they'll make risks that no other funding source will make. And that's, again, in exchange, that's why they expect high returns for that risk.
Yeah.
But they don't want to be in it for the long haul. Typically, angels will get compensated when there is some kind of an exit. Either a bigger investor will come in and buy out the smaller investors, which would be the angels, or the entrepreneur decides to go public, do a public offering, or they'll sell it to a larger company that will take out all the investors. And that's where we get compensated.
Mm-hmm, mm-hmm.
So we like to see an entrepreneur that has some vision for what the end is. Stephen Covey, start with the end in mind. Yeah. Where do you want to end up with this thing? How do you see this exiting? And that gives us a lot higher confidence level that they know what they're doing and that they're planning.
But the entrepreneur is there for the process that they want to be there for, and angel investors are not just coming in to buy them out and kind of get them out, right? In an underhanded way is what you're saying.
Right. We don't want to own the company. We don't want to run the company. We want to make sure that company is wildly successful.
Yeah. All right. Good. And that kind of segues nicely into the final misconception we're going to talk about, which is that the idea that angel investors are sort of like loan sharks, and they're just looking for companies that are desperate for cash, so that they can come in and hold them to really withering loan terms and be really aggressive in getting the repayment. And it's like anyone who has that misconception, that's just not what it's like at all. And like for this you have I think the clearest reframing that of any of these. So what would you say to anyone who thinks angel investors are basically glorified loan sharks?
What do I say to them? They don't have a clue on their financing strategy.
Okay.
And when you're launching a business, especially if it is a scalable, fast growth opportunity, you should have a funding strategy. Mm-hmm. And that funding strategy should look at all methods of funding the growth of a business. And that would include typical bank loans. It could, M&P money is a good way to start. That's mom and pop money.
Yep.
And SBA loans. There are
Mhm.
there are some revolving loan funds in some of the communities. And then there is equity investing. And equity investing plays a very specific role in that. It can. Most companies, most startup companies are just not suitable for angel investing, for equity investing.
Yeah.
Because maybe it doesn't scale well. Maybe the entrepreneur doesn't want to scale, doesn't want to grow, doesn't want to take advantage of it. Whatever the reason, it needs to be a highly profitable, fast growth industry that we would take a look at, because that's the only way that that angel investors can get compensated for the risks that they're taking. And again, it should be looked at as another source of funding for their business.
Right.
How it fits in, they have to determine that. How much equity are they willing to give up? How much should they give up for what they want, for what they for the money that they're going to need? Is it enough? What are you going to do after that when you need more money? What's the second phase? Are you going to go to an A round, or another bigger round? Are you going to go to private equity? What are your options? But you got to look at the whole thing in its entirety. How am I going to fund the growth of this business to achieve its potential, whatever that is? And that's defined by the entrepreneur.
Yeah. Yeah. So basically, if I can kind of sum some of that up in my own way, equity investing is a funding strategy, just like,
or part of a funding strategy.
It's a funding strategy, distinct from, like a bank loan is another funding strategy, and mom and pop money is another funding strategy, and an SBA loan is another funding strategy. And these all have, sort of specific ways that you work with them. And the entrepreneur should know, should have a clear sense of whether equity funding is going to fit into that strategy for them. And it's not just something they go to because they need quick cash and are willing to surrender equity in the company to get that. Right.
And chances are, if that was the case, probably wouldn't go in with them.
Angel investors would want nothing to do with it, right?
Probably.
Right. Yeah. Because you need to see something much better thought through than that. And
exactly.
And unmistakably clear that this is the kind of company that is a good fit for angel investing, right? Which is a very small, very small percentage of them ultimately.
Yep.
Yeah. All right. Awesome.
And just another side note is that we are working with a company that we invested in, and we're connecting them with conventional financing rather than continuing to give away part of their equity. We're saying you might be at a stage in your development, in your growth, where a bank would take a look at lending you money for your inventory and for your growth.
Yeah.
So again, we work with them on those levels too. What's the best for the company?
Yep. So it's not about the return at all costs, is again what you're saying, right? Going back to the first.
Well, it's the rising tide.
Yeah.
If you want. Yep. The thing is that we get a good return when they are wildly successful. So we do everything in our power to make sure that they're wildly successful.
Yep. Yeah. And, I think the returns happen on many levels. They happen on community levels and marketplace levels and reputational levels, all
big impacts for economies, local economies.
Yeah. All right. Well, yeah. Thanks, Jeff. That was great. I think, and I imagine there's a lot of people out there who may have, been harboring some or, any number of these misconceptions. It's easy to form them because of so many things in the culture and the media.
Again, I can't discount that there are probably people out there that fit the mold, but those are the stories you hear.
Yeah,
those are those definitions or those misconceptions didn't happen in a vacuum.
Yeah,
they happen because they read an article about somebody getting taken advantage of, or they've dealt with people like that are in it for the pound of flesh. There are those. What I would recommend is don't work with those people.
Right. How do you? Yeah, maybe and maybe this is where you can speak to any entrepreneurs who'll be listening to this. How do you know, a reputable angel group like the WRBA, for example, who's going to be, constantly having the best interest of the entrepreneur that's in front of them, guiding them versus, one of these pound of flesh people who's, really just going to be after some equity and, to buy them out and take advantage of them. How do you know the difference?
They got to do their work just like we do.
Okay.
We have to take a look at them and understand that they're reputable. They got to do the same thing with where their money's coming from. Absolutely.
Yeah.
And I think we touched on this in a little informal discussion earlier, is that you have to understand the legal documents that govern these relationships. And another misconception again is that legal documents are to deal with trust issues. If you don't trust someone, well, you got to really lock them down in a legal document. If you don't trust someone, don't work with them, period.
Yeah.
You don't want a legal document to have to deal with trust issues. Legal documents are meant for clarification and understanding that this is exactly what I mean. And you go over it, you have to understand the language in there, because those are the governing documents and those are what you agree to, and that you understand, all parties understand what we're agreeing to.
Yeah. But that's based on trust and,
Trust,
a good gut feeling about someone.
And then to answer your question again, how do you know? All these, all the angel groups that I've worked with anyway, have a website or a Facebook page, and they have a listing of their portfolio. Call one of the portfolio companies. What's it like working with this group? That's, we do kind of the same thing. You get information, find associates, people that have worked with them, and you talk to them, call them up and ask them.
Yeah. So basically you check in with a fellow customer, and like you would for any other business,
Absolutely. An entrepreneur, if you're in that position where this is the last resort, this is not where you want to go.
It's not what angel investing
is. The good
for.
entrepreneurs will do their their homework on the people that they're working with, including the people that are providing them money.
Yeah.
You do your homework and you find out if there's a fit, because a lot of these angel groups have different specialties. They like to focus in different industries. We tend to be a little more agnostic. And if we don't understand the technology, but like the opportunity, we'll collaborate with some of the other angel groups that may have investors that have expertise in those areas. So that collaboration is really important too.
Yeah. Yep. And as you were saying before. So, well, awesome. Thanks, Jeff. That was a great conversation. And I think there's a lot of great information for both people who are interested in investing and also entrepreneurs, especially at the end there. So, my name is Aaron Marks. This has been Angel Impact. It's the official podcast of the Wisconsin River Business Angels. Wisconsin River Business Angels is Central Wisconsin's only angel investment group. And today we've been talking about 5 common misconceptions about angel and equity investing and what the actual truth is. And I've been here with Jeff Ebel, who's the president of the Wisconsin River Business Angels. Thanks so much, Jeff. It's been a pleasure to talk to you today.
Yeah, thanks, Aaron.
All right, we'll see you next time.
All right.
Thanks for listening to Angel Impact, the official podcast of the Wisconsin River Business Angels. To learn more about the Wisconsin River Business Angels, visit the website at www.midwestwealthventures.com or find us on Facebook.